Hi all. Hi. Good evening or good morning from wherever you're dialing in. Thanks so much for joining this evening's webinar, co-hosted by Coaxis and the Bridgespan Group. Before we jump into today's session and the webinar itself, I just need to go through a couple of housekeeping notes. So firstly, your microphones have been kept off. But our lovely presenters here, who you'll hear from later on, have made the presentation super engaging for everyone in the audience. So you can use the chat box to drop in any questions that you have for any of the speakers, or if you can just take a couple of seconds now to scan the QR code that you see on the screen, it will take you to a Mentimeter. And throughout Kate and Hari's presentations, you'll be able to participate in mini polls throughout their presentation. The slides can be made available upon request. You just need to reach out to the Coaxis team via the email that you see on the screen. And just a small note that photographs, or in this case, screenshots, will be taken throughout the webinar, and the session is recorded. The materials may be used for Coaxis's marketing, including on our website and social media. So if you have any questions about that, feel free to reach out to me or the Coaxis team. So just a quick rundown of what you can expect from today's webinar. For those of you who are not familiar, I will just start off with a quick introduction to the Temasek Trust ecosystem and how Coaxis fits into this. And then I'll pass over to Kate and Hari, the main speakers for tonight's webinar, who will be going through the bulk of today's webinar, actually. That is a deep dive into the world of impact investing and its full range of approaches. And to finish off, we'll be spotlighting a Coaxis impact opportunity called Mayani, who are empowering smallholders and fisher folk in the Philippines. So with that, to start off with, for the benefit of those who are not so familiar with the Temasek Trust ecosystem and what we do, Temasek Trust is a steward of philanthropic assets that aims to catalyze positive impact by advancing the 4 Ps. So the 4 Ps in this case are planet, people, peace, and progress. TT and its ecosystem entities, which you can see on the screen here, share a common purpose, that is to build a better and brighter future for every generation by advancing these 4 Ps. As part of this mission, TT is also developing new capabilities and vehicles to catalyze action and scale impact. And this includes the support of what we call socioeconomic enterprises, such as Coaxis. So Coaxis, who we are a digital impact marketplace, which connects capital providers with impact opportunity owners or impact projects. We aim to unlock risk capital and harness the power of the wider community to tackle sustainability challenges. Coaxis, on the one hand, has a robust pipeline of impact opportunities which are actively sourced from the Temasek Trust ecosystem itself, or from other leading industry partners, which you can see on the left-hand side. This allows capital providers on the platform and other users access to a wide range of impact projects that caters to the needs of capital providers' mandates. So that includes charities all the way to ventures and startups across all of the United Nations Sustainable Development Goals, and also for projects looking for a range of financial instruments in their fundraising. To date, Coaxis has over 100 impact opportunities live on the platform from over 40 countries. We have a strong focus on Asia, but there are options to support projects from other parts of the globe as well. These impact opportunities address a diverse set of intersectional challenges and allow direct access to projects across a variety of different impact categories, with the most represented ones on the platform being climate, health, employment, and education. So our platform has been built to host kind of these ecosystem building functionalities that provide all users on the capital provider side and also the impact projects themselves kind of a one-stop shop for knowledge-based resources, events, and connectivity, not just to the Temasek Trust ecosystem and all the entities under that, but the wider kind of global impact ecosystem as well. So TTE itself is active across the entire capital spectrum, which you can see here in this kind of graph, with opportunities for all the various ecosystem entities and initiatives to collaborate with one another. So for example, you'll see on the screen a program called Amplifier. So participants or the startups that are part of this program receive a recoverable grant. And after they go through this program, they can work with Coaxis to receive further investments from other funders, both institutional and individuals as well. So you'll hear from Mayani, who is actually a graduate of the first cohort of the Amplifier program. So everything we do at Coaxis is supported by kind of the whole Temasek Trust ecosystem of resources, services, and partners. This includes impact project origination, which I already touched on, and also linking up with potential co-funding partners to pool capital for impact projects, and also to gain access to resources around capacity building and knowledge building as well. On the capacity and knowledge building front, we work very closely with the Center for Impact Investing and Practices, otherwise known as CIP, whose primary aim is to advance impact investing knowledge, communities, and practices. CIP too are active across the spectrum of capital, but with a strong knowledge building and creation focus. So they build knowledge assets, which includes developing Asia-focused research, data sets, and tools, and they also conduct sectorial deep dives as well. They also run the Amplifier program, which I briefly mentioned in my previous slide, which is supported by the Philanthropy Asia Alliance. This program helps startups survive the valley of death and reach commercial viability via philanthropic capital and capacity building through corporates, investors, and other professional services providers. You'll hear from Mayani later, who, as I mentioned, was part of the first cohort for the Amplifier program, and I think serves as a great example as to how the various Temasek Trust ecosystem entities work together to support the impact projects that come our way. So that was just a very brief introduction to Coaxis and the Temasek Trust ecosystem and how all these different entities work together to unlock capital from across the entire capital spectrum. We welcome you to connect and partner with us to build pipelines, to feature your projects on the platform, and also to deploy capital to innovative solutions. So with that, I'll pass on now to Kate and Hari from the Bridgespan Group to take you through today's webinar. Thank you.
Great. Hi, everybody. Thanks for making the time to chat with us about impact investing today. Hari, can you confirm that you can see my screen?
Yes.
And then I apologize. We're just getting in presentation mode. So we're excited to talk to you today about some of the trends that we've noticed over recent years in impact investing and talk a little bit more about what actually makes an impact investment. And then at the end, we're going to have an opportunity to play a little game to try and look at different companies and understand under the hood what makes them impact investments versus ESG investments. Hari, please go ahead.
Great. Yeah, we'll maybe do very quick introductions. I'm Hari. I'm a principal with Bridgespan in the Singapore office here. I've been with Bridgespan for about 5 years and worked on a wide variety of issues. And more recently, I've been leading a lot of our work in climate change in this region. I have some experience working across the impact capital spectrum, advising foundations, philanthropists, but also impact funds and family offices. But Kate's sort of the real expert here, and she'll be driving a lot of the webinar today. But over to you, Kate.
I don't know about that, but I am really happy to be here. I'm coming to you from Washington, D.C. I've been with Bridgespan about 4.5 years cumulatively, but I actually spent the last 3.5 years working for the U.S. government's impact investor, which is called the Development Finance Corporation, which invests throughout primarily Latin America, Asia, and Africa through a $60 billion fund. And while I was there, I led strategy to help realign the organization to invest more in development. And then within Bridgespan, I primarily focus on working with impact investors, everything from family offices pursuing innovative strategies to large private equity firms. And then I also spend a chunk of my time in climate. So it's a real pleasure to be here and also to kind of learn about all the great things that the Temasek Trust ecosystem is doing and the launch of Coaxis, and also just to sort of see the rapid expansion of this work, particularly in Asia, is really exciting. I want to take a minute just to introduce Bridgespan in case you're not aware. Bridgespan Group is a nonprofit consulting firm. Our heritage is from Bain and Company. We spun out about 20 years ago, so it's a similar management consulting model, entirely focused on achieving maximum impact. Within impact investing specifically, we provide services including impact diligence. At this point, we have one of the largest databases of impact diligence in the world. We've looked at over 1,400 companies in quite a lot of depth. We work with clients across what we would call the return spectrum, everything from market rate private equity to foundations that have investment windows. We've, across our philanthropic and impact investing work, influenced well over $20-some billion. And then at this point, we have offices throughout the US as well as Mumbai, Johannesburg, and most recently, where Hari is in Singapore. So we're excited to be spending more time with you all in Asia, and thank you for having us. We'll start by talking a little bit more about the investment continuum that we've referred to a couple times, and then we'll move into trends in the field.
Great. Yeah, so I'll kick us off with this framework to ground today's webinar on investing across the continuum. And this may seem straightforward to some of you, but I'll spend a little bit of time just going through this so that we all have the same definitions and we are on the same page. And so as you see on the screen, investments can occur on different points on a spectrum of financial returns, which is sort of the axis you see in the page here. And also investments can also differ based on the approach to impact taken, which is not explicit on the page, but I'll talk through that as we go through this. And there are 4, I guess, typologies that are laid out here. So just going through each of them one at a time. The first one, just conventional investing. So these are the financially motivated investments. So these are your traditional investors, like your mainstream private equity funds who expect risk-adjusted market rate returns. Now, generally speaking, many of these investments do not have any impact considerations. But in the last 5-10 years, a lot of these investors have started incorporating environment, social, and governance, ESG considerations into their investment decisions. So they're increasingly becoming more and more what we would call socially responsible or environmentally responsible investments. The column next to that, which is sort of the finance first impact investing, so this is where there is a little bit more stronger alignment with impact. So this is where I guess you're investing in companies or in funds with a clear intention of creating social and environmental impact along with financial returns. But these finance first investors also want the same risk-adjusted market rate returns. And so the type of actors, I guess, that do finance first investing are, I guess in recent years, there have been PE funds who've launched dedicated impact vehicles to do this. And the Rise Fund sort of is one example. Now, important to note that while both the finance first impact investors and the conventional investors, they both seek market rate returns. They're not the same. And I guess in some of the later slides, we'll go into the differences between ESG investing that some conventional investors do and what finance first impact investors are. The third column on this page is the impact first investing. These are investors who are maximizing impact over all other considerations, and they have a higher bar for impact, but that doesn't necessarily mean that that they will deliver concessional returns always or below market rate returns always, it's often the case, but it's not necessary that's true all the time. So they may be willing to make other trade-offs. So they may be willing to take higher risks, so investing in early stage innovations, providing patient capital and waiting it out, or even like investing in entrepreneurs and markets that face some sort of barrier that excludes them from the capital markets. So the financial returns here can range anywhere from partial recovery of the capital to concessional returns to even higher returns without compensating for the risks that they undertake. And again, these investors, so investors who have any market rate fiduciary mandates will not be able to make these impact first investments because the returns would really vary. And so they're usually mission aligned funds or even like philanthropy bootstrap funds, Acumen being sort of a good example that do impact first investing. And then the last one is philanthropic grants, which many of you, I think, here should be familiar with. So these are only motivated by impact. There's no expectation for any financial returns. So it could either be sort of a complete loss or maybe some partial capital recovery. And of course, even here, the threshold for impact could vary. So you have some grant makers who are intentional about impact, but relatively more passive. And then you also have other sort of like, I guess, grant makers who are very, very rigorous in their impact measurement and very evidence-based, the Gates Foundation being a good example there. And lastly, maybe I'll just say a couple of other things. So this 4 typologies are not exhaustive, right? Like you see a lot of other types of investing. So blended finance, again, maybe one model where I think some of you are familiar with. So it's blending different types of capital across these two, across the spectrum, and creating financial structures that have varying return requirements, right? But regardless of where you stand on the spectrum, having a rigorous approach to impact is critical to be able to direct that capital effectively towards social or environmental challenges. And we'll, I guess, also dive into some of that in some of the later slides. Yeah, and with that, I will pass it back to Kate to take us through some of the meatier stuff.
Great, thanks, Hari. I just want to pause and say we are really excited to hear your questions. So please feel free to drop them into the chat and we'll try and respond to them either just by typing back to you, or if we see them and can work them into the conversation, we will. But we do want to hear from you. Okay, so let's take a minute to hear about the trends in the field. This is, depending on who you talk to, people will say, oh, impact investing is such a new field. It's such a hot topic. And then every once in a while, you meet someone who's like, I've been doing impact investing since 1982. This is nothing new. So let's try to get under the hood of that a little bit and also just understand really how big this world is. So using the same kind of typology that Hari was using, you can see on this chart that we consider along the x-axis the approach to impact, everywhere from absolutely no approach to impact to a very rigorous evidence-based impact, and then expected financial returns. So obviously in the top left-hand corner, you have the giant world of financially motivated investments, like most people's 401k, large pension funds, large asset managers, coming to almost 260 trillion. Then you have the world of ESG, which is really pretty large and it is growing at 25 trillion. And we would consider that to have a passive approach to impact, as Hari would say. We'll talk more about that in a little bit, but a lot of the times you'll see ESG as having what you would call a screen. So you'll have an ESG fund that will say, well, we just don't invest in tobacco and firearms. But otherwise, we can invest in anything. So a lot of ESG funds, for example, will hold many tech companies that have made carbon commitments, as an example. Then we come into the world of intentional impact investments. So that finance first world that Hari was talking about has just passed over $1 trillion. We'll talk more about what makes that up in a moment, but you won't be surprised to hear that a lot of it's in climate. And then the world of impact first investments that take some sort of trade-off with our financial returns in order to have more impact, come to almost 400 billion. So again, this is dwarfed by the size of the overall financial sector. But I think if you were to talk to the pioneers of impact investing back in the 80s and say, man, in 2025, this is going to be the asset pool that impact investors are working with, I think they would have been pretty pleased. I'll just call out one more category, which is this innovative results-based finance, which is a really interesting one. It's quite small. But if you hear about like pay for success or outcomes bonds, those are financial instruments that are structured to pay out when a particular impact is achieved. So they can be really quite an interesting approach, and they're one we're hoping to see grow over the coming years. Although, as you can imagine, they're relatively complicated. So I'll move on, but again, just want to land with you all the point that this is no longer just a niche corner of the market, but is a relatively large and growing portion of investable assets around the world. And I would say in particular, in the recent years, we've seen a lot of growth in Asia, which is why we're really excited to be spending time with you all this evening. So let's talk a little bit more about the finance first side, the institutional impact investing space. The growth here has really been explosive just in the last 10 years. So back in like 2015, 2016, you were starting to see some of the first movers among the institutional investors testing the waters and understanding if there was a market fit for them. I would call out Bain Capital Double Impact, based in Boston, is really one of the first movers. And then we started to see a little bit of growth and expansion. TPG's Rise Fund was at the time the largest fund that had been raised, and really made a big splash by having a highly intentional approach to impact that we supported them on at Bridgespan. And then, I think one of the things we started noticing as Bain and Rise and others got in is that their limited partners who were backing the funds also started becoming really sophisticated consumers of impact. And they started asking other funds that they placed capital with about their impact strategies. So you saw a handful of the other kind of North American or European-based asset managers starting their own impact windows and really having kind of a race to the top dynamic, which was really exciting. ABC World Asia launched in 2019, which was exciting as sort of the first institutionally backed fund focused in Asia. And then, I would say when we come to today, we are continuing to see a ton of competition in this space, which I think sometimes people are surprised at. But I would say given the growth, given the focus in recent years on climate, that's driven a lot of money into the space, both traditional climate investments as well as resilient infrastructure have been huge drivers. And then we also continue to see pension funds, endowments, the true sources of capital really look for these investments. They look for these investments partly because they want to do the right thing. They also look for these investments because they believe that they're likely to perform better over time. You can imagine if you're investing with a 50-year time horizon, you're pretty interested in making sure that you have a climate sound strategy. So that continues to crowd a lot of assets into this space. And then, I would say at the moment we are seeing fewer large investors entering the market. I think a lot of that is because they're already here. But we are seeing existing managers continue to announce large follow-on funds. I think the success of the large managers has taught their investors that they can continue to park money with these and achieve competitive returns and achieve impact that they can feel good about. And as they do that, their LPs are continuing to ask more and more. So I would say at the moment we're seeing LPs starting to ask for more rigorous impact reporting, and sometimes they're even tying asset manager compensation, not just to the financial returns, but also to the impact returns, which is a really exciting development in the field. I'll move on, but again, feel free to pop any questions into the chat. The next thing I want to talk about is the evolution of the impact first investing space. As a reminder, as Hari explained to us at the start, impact first includes the smaller universe of investors who are willing to take a financial trade-off in order to enhance impact. Historically, this was entirely the purview of large foundations. Rockefeller and Gates would be two kind of standout performers. Gates has a large program-related investments window, and so for many years they have offered strategic investments alongside their grant-making priorities. So for example, as we all know, the Gates Foundation does a ton of work in public health. They also invest in innovative healthcare companies. Rockefeller Foundation has been a leader in what we would call innovative financing, creative structures. MacArthur has led in the blended finance space that Hari is speaking about. And I could go on, but these foundations have done really great work in really starting to prove out this field of impact first impact investing. And I would say for many, many years, it was really, it was a little bit lonely. They didn't have a ton of company. I'm happy to report that increasingly family offices are moving into the impact first space and are doing some really exciting work. I'll take Kennyarth as an example. They are a UK-based asset manager that has picked up some really innovative strategies, particularly in rural livelihoods and agriculture. And they are willing to be flexible on their returns in order to catalyze greater impact. Lower Carbon Capital is based on the west coast of the US, and they invest in early technologies for climate, and they understand that does sometimes accrue outside risk. Additional Ventures has done some fantastic work in deep ocean carbon sequestration technology. I could go on, but I think you get the sense from this that these family offices are often picking off extremely focused strategies where they can really make an impact, and they're often becoming almost market builders in that place. You know, they'll be the leading investor within a small niche area, and they'll help build that marketplace over the years. And they are able to take a really long time horizon, and they're able to take quite a lot of risk. And I would say the impact that they're achieving is really pretty incredible. So if I were to call out sort of one space within the impact value chain that I'm most excited about today, it would be this one, the entry of family offices into the impact first space. And again, you know, we're starting to see more of that in Asia as well, which is really exciting. As you can tell, most of the names on the page here are US or European based. So this has been a rapidly evolving field, and we're excited to see it really globalizing. I promised that I'd dig in a little bit more to what's going on under the hood of the growth in the field. Just want to share kind of some thoughts on like total AUM on funds launched. So as I mentioned previously, this blue line here on the left-hand side shows the generalist funds, your TPG Rises or ABC World Asias that invest across different issue areas. And that really peaked right after the pandemic and has now started to taper off, still is at a relatively high level for the field. The place that we've seen a ton of growth, as you can see, is this green line. Those are climate-only funds. I think that policy changes in the US under the Biden administration shifted a lot of assets there, as well as just a growing global awareness of both the need to invest in climate and also the attractiveness of investing in climate have really shifted assets there. And then along with that, we're also seeing a growth in emerging markets funds. And we are seeing some other focuses on specific sectors, water and sanitation funds, food and ag funds. So, I think the underlying message here is that you're seeing a field that is continuing to become more sophisticated and specialize. I want to take you through one more set of concepts, and then we're going to do a little bit of an exercise to understand which types of investments would count as impact investments. Before we do that, I want to talk to you about how investors understand whether or not they are having impact. The watchword here is evidence. No good financial investor would make an investment without looking at the past performance of the business to understand how it might perform in the future, unless you were truly investing in a venture style, highly speculative. And there you would probably look at the past performance of the founding team to understand what you believe their potential to be. It's the same way for impact. We do our best to look at evidence underlying the product and services that the business will bring. There are a variety of ways that we do that. It can be anything from kind of a narrative approach to a highly quantitative approach. I'll just call out as a particular example of the quantitative approach that the RISE Fund uses what's called an impact multiple of money, which is meant to be an exact analog of the financial diligence process, resulting in an IRR. And so that converts, for example, health benefits and climate benefits into a monetary value that you can make different assumptions about and then debate at investment committee. So that's a particularly quantitative example. And if you can get that far quantitative, you can imagine that there are a variety of other options that would be slightly more qualitative. For example, we see a lot of impact rubrics. All of them are good approaches, so long as they're bringing evidence to the decision making versus relying on intuition about where impact lives. I think you all know the saying that intentions can sometimes land us in a bad place. So we really look to evidence to try to understand if we're likely to achieve our desired outcomes. The final concept I want to cover and then get into this quiz is to talk about the difference briefly between ESG and impact investing. Folks have a lot of trouble kind of teasing these two out when you actually see it in a company. I like to think about ESG investing as not doing bad things. So when you're doing an ESG screening, you're going to ask questions like, does this company employ child labor? Is this company polluting? Is this company corrupting the government environment that they're working in, right? Are there actively bad things that this company is contributing to the world around it? On the other hand, and those actively bad things are usually unintended consequences, right? The company didn't start in order to pollute the river. They just decided that that was the most convenient way to deal with their manufacturing runoff. On the other side of the spectrum, impact investing is really about intentional additive impact from their products and services. So that's a company that was started to deliver a particular product or service or to operate with a very specific business model that delivers impact through the way it operates. So one good example so I would say two good examples here of an impact investor. A very classic one would be an innovative cancer technology. Their product is inherently saving lives. The other way you might become an impact investment would be to have a business model that is specifically tailored to, in the way it operates, helping people. So for example, in agriculture, there's a lot of research to suggest that working with smallholder farmers improves outcomes for those farmers. If you offer them long-term contracts and technical assistance. So we'll see a lot of businesses that are structured to source from smallholder farmers in a responsible way, and that is how they deliver impact. So Haran and I are going to move from here into a handful of case studies. Erin, should we pop up the Slido, or should we just use the slides here?
So if everyone's already kind of scanned the Mentimeter, I can start the Slido. So as Kate and Hari kind of go through the case studies, you can use the Mentimeter to, it's just yes or no questions as they go through case studies. So I think, Kate, you can keep sharing your screen and I'll just present the Mentimeter.
Oh, perfect. Okay, great.
Yep.
So what we want to do is we're going to present a series of companies, and we'd love you all to just vote. Is it an impact investment? Yes or no? I'm going to start with Warby Parker. For those of you who don't know, Warby Parker is a retailer of prescription sunglasses, glasses and sunglasses. And every time you buy a pair from them, they donate a pair of glasses. So would love to hear from you if you believe this is or is not an impact investment. Some of the questions you might think about as you determine that are, does the company help support the UN Sustainable Development Goals? And is the impact that they're delivering to support the sustainable goals truly part of their business model or an add-on? Are we looking, Erin?
We have 10 people who've responded, so still waiting for quite a few.
All right, Erin, I'm curious. Tell me what folks have said.
Okay, so far, no is winning with 9 votes. And then we have 4 people who voted yes, this is an impact investment.
Okay. The no's have it. This is not an impact investment because the glasses donation is not a core part of Warby Parker's business model. They could stop at any time and still have their core business model of selling sunglasses in urban centers around the world. So while they do really fantastic work as a charitable program, it is separate from their core business model. Great job. The next one we want to talk about is mobile payment technology. So this is a really innovative company that provides an interface between banks, mobile operators, governments, and businesses. You all have one of these on your phone right now. This is a particularly interesting one because they've also integrated with governments to enable the distribution of fertilizer subsidies for farmers and other government-based products for folks who are either unbanked or have bank accounts but are very far from those bank accounts. They operate exclusively in Africa, and the bank account penetration there is quite low. Would love votes. Is this an impact investment? Yes or no?
Okay, they're slowly coming in. So far, we have 8 who have said it's a yes, and only 1 person who said it's a no.
The yes have it. This is absolutely an impact investment. There's a ton of research to support that the introduction of novel technologies, this company is not M-Pesa, but you've probably heard about M-Pesa as the best known example in East Africa of financial technology with widespread penetration. It's had a huge impact on helping families weather droughts or other emergencies just by having somewhere safe to store cash other than, under your mattress. And PACE has also been documented to have a real gender benefit. So women are able to have more control over their financial lives, better able to save money to send their kids to school, better able to leave difficult situations. So I would say that this sort of financial technology has had a really outsized impact. And as you all know, the cost to distribute this is practically zero once the mobile networks are in place. So they reach quite a lot of people and have a relatively large impact per person. So this is a really fantastic example of an impact investment that actually surprises many people. The next example is an educational technology platform. So this is a US-based company that offers kindergarten to 8, so like young kids through early teenagers, that helps provide real-time data and personalized lessons, and spots individual needs for certain students. They do have they have, because of the strength of their data, been able to prove that the students who use them have better math outcomes than the students who do not. And as you may know, most of there is a significant educational quality gap in the US where they operate. And many students in this cohort are not on track to graduate with the skills they need, particularly in math literacy. Is this an impact investment? Yes or no?
Slowly coming in. Just a reminder for those of you who haven't joined the Mentee link yet, I just dropped it in the chat box. So if you want to join in these mini quizzes, you can as well. Okay, it looks like we have majority voting yes, just a handful voting no for this question.
That's great. The yeses have it. All right, I'm going to do one more and then Nadine turn it over so that we can, Aaron, turn it over so that we can hear from Mayani. The last one I want to go through is a super well-known brand. I'm sure it is in your bathroom right now. Unilever, a consumer goods company all over the world. They produce food, energy drinks, personal care. They run educational programs, particularly in emerging markets, on hand washing. They do a great job of limiting their carbon footprint, and they're really strong on worker rights. Is this an impact investment or an ESG investment?
Okay, we still have quite a few coming in, but pretty much everyone has voted no so far.
That is great. All right, this is a classic ESG investment. Unilever is a fantastic company that does a really good job on their ESG metrics, but their core product is not inherently aimed to drive impact. So we would classify them in the ESG category. I will wrap up here so we have time to hear from Mayani. It's been really fun chatting with you. Hari and I are going to stay on the line. We're happy to take any questions via chat, or you can feel free to reach out to us at the Bridgespan Group. Again, we are a nonprofit, which means that we are really here to support you all in working on the impact programs that you're trying to launch. And we're always happy to just be thought partners and hop on the phone for kind of an informal conversation to support the growth of the ecosystem. So I wish you really great luck in the work that you're doing and appreciate you joining us late at night. And I also see some familiar faces in the US. So you're joining us early in the morning, and thank you. And I'm really looking forward to working with all of you in the years to come.
Great. Thanks so much, Kate and Hari. If you want to get in touch with Kate or Hari, maybe you guys can drop in your emails or Bridgespan's email in the chat box as well, or you can feel free to reach out to Coaxis and we can make that connection for you as well. So finally, in our agenda today, we've invited JT Solis, who is the co-founder and CEO of a Philippines-based kind of agri-fishery company called Mayani. So JT is here today to share a bit more about the work that Mayani is doing to empower smallholders and fisher folk in the Philippines and kind of the different impact investments that they've received in order to help their organization scale and grow. So over to you, JT.
Thanks a lot, Erin. It's nice to see here a lot of familiar faces coming from the Temasek Trust ecosystem. And thank you so much to Kate and Harry for that very incisive presentation about the spectrum of capital, and that sort of brief history of that spectrum of capital. It's a very good crash course on impact and ESG investing. I'm JT Solis. I'm calling all the way from Manila. I'm born and raised in the Philippines, raised on rice and fish, and I actually belong to a family with very strong agricultural roots, especially in the southern island of the Philippines. You can see in my slide right now, I'm briefly gonna share with you a quick story about our journey as an impact-driven agri-fisheries platform, and also walk you through how we've benefited from the emergence of that spectrum of capital, especially in the impact space. And very briefly, maybe talk to you about how we could sort of collaborate moving forward as we reshape agriculture value chains in rural Philippines. Way back in 2019, before COVID, we spoke with a smallholder rice farmer in southern Philippines named Felix. In the context of the Philippines, these farmers are very small with less than 1.2 hectares of land in terms of land holding size. And in our conversation with him, he actually articulated two recurring problems as a smallholder rice farmer. A, he can't find a market for his rice harvest. B, even if he is able to find a market for his rice harvest, that buyer isn't able to pay him equitable farm gate prices that would enable Felix to recover his cost of inputs and production. And so we asked ourselves a question whether that conversation and that problem by Felix is a broader reality in the Philippine agri-fishery sector, whether it's just a microcosm of a big problem that really exists in the sector system-wide. And I think the biggest irony we realized as technopreneurs was that while agriculture has the biggest poverty reducing power versus other sectors, it actually has the most number of the poorest of the poor in the Philippines. And that's 10 million of them, 10 million smallholder farmers and fisherfolk. And so even the Philippine Statistical Authority actually cited that a lot of these Filipino farmers and fisherfolk are mostly self-employed, small, marginalized, and they belong to the country's poorest of the poor. And so given that reality, what we did was we built an end-to-end digital ecosystem, what we call the Mayani platform, that allows us to consolidate production at scale coming from various smallholders, coming from rural Philippines, optimize that supply chain by taking out the 7 layers of middlemen, and digitizing it end to end to create that massive data forest, efficiency advantage, and predictive firepower to be able to better match fragmented supply with recurring institutional demand. And I'm saying institutional demand coming from the likes of Jollibee, Hilton, City of Dreams, large institutional brands operating in the Philippines and even globally. At the same time, we saw that it was also relevant for a lot of our smallholders to also receive agronomic support and development interventions, such as access to climate smart agriculture inputs, especially in the context of tropical Philippines, where you have El Nino, and also access to rural credit to be able to combat predatory lending, or what we call locally in the Philippines is 5-6. And so a key piece of technology that we've developed along that digital ecosystem is something that was funded by the Asian Development Bank. I would say our very first backer in that broad spectrum of capital we were able to benefit from. In that instance, we were able to create this digital farmer's companion that allows to digitize production for our smallholders, but at the same time enables us to do smart forecasting in a supply chain that is perhaps fraught with a lot of data deficit and asymmetry of information. And so in a lot of ways, we have created this impact-driven tech revolution that has disrupted the Philippine agri-food supply chain for the better. From what literally started from a very small apartment garage with me and my co-founders actually doing things ourselves. Now we move truckloads and truckloads of fresh produce and catch coming from different smallholders across 7 regions of the 7,000 island archipelago nation that we have. Some concrete examples which are publicly available include helping out, for instance, native tomato farmers in the north, Formosa pineapple growers down in the south, and also back in the east, Etbayat organic garlic growers. Now we're ahead of the curve in the Philippine agri-fishery supply chain space. We're proud to share We currently work with over 144,000 grassroots organized network of smallholder farmers and fisherfolk across the Philippines. We've grown 27 times since our launch. We cater to some of the Philippines' largest B2B brands, covering 343 stores, operating 23 cities and municipalities. These are just some of the partners that we have in the ecosystem, some of which are quite recognizable. You could see Shell on the right, Subway on the lower left. But what really keeps us going is the fact that we have been creating and cultivating positive outcomes and impact on the part of our grassroots communities as a byproduct of our robust commercial traction. 30% attributable rise in farmers' income. A huge percentage also of our smallholder network are actually women, which speaks of our contribution to the agricultural she economy. And in a country that's always grappling with problems such as food insecurity, malnutrition, a lot of wastage, and inefficient food supply chains, we were able to reduce food loss by 27%. Because of this, we were able to create this global coalition of impact-focused backers from a spectrum of capital providers, from DFIs such as the likes of ADB, family offices such as the family behind OSK Group in Malaysia, Silicon Valley venture capital guys such as AgFunder, Plug and Play Ventures, strategics such as Walmart's Ninja Cart, and of course, philanthropic and impact-focused funders such as Temasek Trust Philanthropy Asia Alliance and CIIP. And so something we've really been super thankful about is the fact that because of that spectrum of capital that we were able to leverage and draw support from to be able to reshape rural agri-value chains in the Philippines, we also got embedded into the very ecosystem that allows us to really maximize that spectrum of capital, particularly that philanthropic and impact capital space. Through this, we were able to engage the COAXIS team and also be able to meaningfully forge those relationships with a lot of those family offices, high net worth individuals, institutional investors, and also philanthropic investors. But something that's really encountered right now by a lot of our smallholders is perhaps the biggest existential challenge that smallholders across the world is also encountering: climate change. The biggest argument we would always make is that rural smallholders are the most affected by climate change, and yet they're the least capable of adapting to it. Because of this, the catalytic capital we got through the Amplifier program from the Temasek Trust ecosystem entities, we were able to fully improve our advanced integrated cold logistics, something that we're leveraging right now to be able to combat food loss and also be able to prevent the natural and accelerated respiration of the fresh produce of our farmers and translate, therefore, those fresh produce into incomes for them. But at the same time, also able to further unlock commercial capital, in our case, $1 million from the catalytic capital we got from the Temasek Trust ecosystem entities. To further humanize our story and our journey, I'm very proud to share some of the pictures of the communities we work with at the grassroots. You can see in here one of the communities with which we have engaged. It's a people's organization in Southern Luzon. We champion nature-based solutions to be able to build smallholder resilience in a community that's perennially affected by storm surge. We are able to restore biodiversity for perhaps a country that's considered one of the biodiversity hotspots of the planet, but at the same time sustain rural livelihoods for them. At the same time, for perhaps one of the most important high-value crops that we have in the Philippines, white onions, we also engage and work with these smallholder farmers in Central Luzon. And we were able to cultivate sustainable farming practices, boosting yield gaps, but at the same time, increasing rural incomes. At the same time, we're also championing what we call ocean stewardship and also responsible seafood sourcing. These are fisherfolk communities. You can see a lot of them are women. A third of fisherfolks in the Philippines are actually mostly women. These are communities that are living and residing in along the West Philippine Sea. And one key cooperative of farmers, group of organized farmers, 14,000 strong of them, growing highland vegetables in the mountains in rural Philippines. This was featured by World Bank. We were able to build strong market linkages for them, but at the same time leverage the power forward contracts to be able to accelerate their transition towards climate smart agriculture practices. And in our pursuit of being able to really holistically reshape rural agri-value chains in the Philippines, we partner with the Alibaba and the Mitsubishi-backed GCash to be able to drive the largest agri-credit movement to back the rural unbank, especially for our smallholders, something that also leverages our knowledge and our passion around blended finance. And because of this, something that really sustains the momentum and keeps the momentum going is getting the institutional backing of Climate Policy Initiative and the Global Innovation Lab for Climate Finance to be able to further unlock sustainable investments around smallholders by leveraging market offtake, blended finance, and climate smart agriculture inputs. In all of these occasions and at various points in the journey, we have seen that focusing on just one type of capital limits you, while if you are able to focus on a broader spectrum of capital, different modalities of instruments, it allows you to fully harness the power of capital markets, particularly sustainable investments, and drive them towards where it's needed the most and where it could make the most impact. And so, to wrap up my presentation and my story of how we started and how far we've come, if you're thinking of collaborating with us, I've cited here three specific ways or three specific themes from which you could sort of structure how we could work together and perhaps firm up some synergies. The first one is because we're part of the Global Innovation Lab for Climate Finance and championing our smallholder-focused blended credit fund. We're more than happy and open for working group mentors for that. Second is we're still looking for more like-minded partners, outcome-based funders, impact investors at a project level for a lot of our nature-based solutions projects with people's organizations in rural Philippines. And third, and this is a new innovation we're rolling out, we're looking for more supporters, maybe part of TA providers, funders, commercial partners in terms of a rollout of our smallholder climate protect parametric insurance in a country that sits at the #1 spot in the World Disaster Risk Index with about 20 to 25 super typhoons in a year. We think that it's an instrument, it's an innovation that the sector needs the most. At the end of the day, this is what motivates us every day. There are over 10 million farmers and fisher folks across the archipelago nation of the Philippines. And we think that by working with ecosystem players like you guys, Coaxis, Bridgespan, and all the other like-minded partners who are attending this webinar and beyond, we think that we can really make a dent in this space if we come together and actually converge around specific collaborative points to be able to reshape our agricultural value chains for the better. So if you want to help reshape the future of the Philippine agri-fishery sector, my email is jt@mayani.ph. I'd be more than happy to chat. Thank you.
Thanks so much, JT, for your sharing. I hope that also gives the audience kind of a little bit of a flavor of the kind of impact opportunities that we have on the platform. So Mayani is just one of over 100 that we have on the platform. So if you're interested to learn more about the other opportunities that we have or would like to connect to Mayani, you can reach out to Coaxis or to JT directly himself as well. That actually brings us to the end of this webinar. I think we managed to buy a little bit of time there. So I just want to thank again Kate and Hari as well, who opened up with their presentations, for taking us through kind of the impact investing spectrum and also through your engaging case studies as well. We hope that you've enjoyed today's session. We welcome any feedback or any kind of ideas for any upcoming webinars or themes and topics that you'd like to see more of from the Coaxis community as well. You can stay in touch with us by subscribing to our bi-monthly newsletter or by following us on LinkedIn or by signing up to our platform, which you can see here, www.coaxis.network. It's free to sign up. And when you sign up, you'll be able to explore our marketplace of impact opportunities, our Knowledge Hub resources, which includes past webinars and events that we've run, thought leadership, and more. And in our marketplace, as I mentioned, you'll be able to explore kind of the full 100 over opportunities that we have on board. Thank you all very much for joining us today. We hope to see you again soon. Thank you.